So now I'm delighted to introduce Nick Bramble, who is Director of Global Trade and Economic Policy at Google, who will be our moderator of our next panel, which will be a discussion on services and digital trade in Trump 2.0 and tariffs and the prospect for trade agreements and addressing retaliation. Nick, I invite you and panelists to come to the stage.
All right, we've got an esteemed panel here, and the longest panel title I've seen in quite a while. So we'll try to condense this during the course of today. So we're joined by three great panelists here, and one person who's joining over Zoom, John Drummond. There he is, who's the head of division at the Trade and Services at the OECD. Thanks for joining us, John. We also have Carlos Enríquez, who's the senior director for regulatory affairs at DHL Express. A lot of DHL fans out there today, I can tell. We have Ximena Hartsock, who's the CEO and co-founder of BuildWithin. Thanks, Ximena. And we have Caleb McDowell, who's the senior director and head of international affairs at Visa. So great panel today. I wanted to sort of kick it off by going to John, who is up there on the screen, up there as well, and asking a little bit about some recent reports the OECD has put out that relate a lot to the topics we're discussing today. As an avid consumer of OECD reports, I always like reading these things. And two that jumped out recently were the report on the global economic outlook that the OECD put out, and a report on supply chain resilience and economic security. I wanted to sort of ask John about sort of some of the contradictions or some of the sort of different dynamics playing out on the global trade stage right now. On one hand, this report notes that the digital services sector and the policy has become increasingly fragmented around the world. But on the other hand, the report captures, I think, what's been a theme of today with the increasing integration of services, manufacturing, the physical economy. For example, just on issues like AI, the report notes that AI companies have invested in physical capital at nearly twice the rate of other firms, and their R&D investment rates are about 3 times the rate of other firms. So I think we're seeing these kind of interesting contradictions play out, where global trading is becoming more complicated, service barriers are going up. We're also seeing more investment and more integration between the services and manufacturing economies. So, John, I don't know if you have anything to say about sort of these reports and what your view is of global trade and where it stands today and how it relates to the themes of today, the services and digital trade sectors.
Yeah, well, thanks very much, Nick, and hello, everybody. Thanks to Christy and Casey for making it possible to participate virtually today. Nick, as you mentioned, we had trade ministers here in Paris last week for the annual OECD meeting, and the reports you mentioned maybe can be useful to set the scene with a bit of a macro view from the OECD, and then I can relate it a little bit to services and digital trade specifically. So a couple high-level observations that kind of strike me coming out of recent meetings is that the global economy is going a little bit in the wrong direction. We hear a great deal of concern with the fundamental challenges faced by the global trading system, but at the same time, a highlight on non-market policies and practices, which are resulting in a concentration of critical supply chains that are a real concern. We see significant imbalances that do exist and should be addressed, but at the same time, unilateralism, uncertainty, and isolation are not the best solution. So I can unpick those a little bit. In the OECD Economic Outlook last week, we project that global GDP growth is going to slow from 3.3% to 2.9% based on a scenario of where the tariff rates were in mid-May. Much of this slowdown is concentrated in the United States, in Canada, Mexico, and in China. And growth through 2025 is expected to be especially weak and only about 1.1% in the US. On the concentration in the supply chain resilience review that you mentioned, one of the main findings there is that there is about 50% more import concentrated products today than there was in the late 1990s. And 30% of this concentration comes from China. This is the highest amongst all countries, and that's up from about 5% in the late 90s. And to us, this demonstrates some of the implications of non-market policies and practices. And these are legitimate concerns that should be addressed. On the other hand, a lot of our work shows that simply relocalizing production is not the answer. And we estimate that addressing high concentration by focusing only on relocating production domestically would reduce global real GDP by more than 5%, while at the same time creating new vulnerabilities to shocks. So we're going a bit the opposite direction of what policy should be aiming to achieve. What we think is that policy should rather aim at new and untapped sources of supply globally by enhancing flexibility of supply chains. And this is where services and digital trade become indispensable. On trade imbalances, you've heard a lot about discussions relating to goods, production, and manufacturing employment. But I would like to flag that there's also a pronounced lack of reciprocity in services liberalization between OECD and non-OECD countries. OECD data shows that OECD markets are on average almost 50% more open than non-OECD counterparts. And given the services exporting strength of many OECD countries, we think that this asymmetry contributes to the chronic global trade imbalances and should be addressed by further opening of services markets. And here we're talking about barriers across logistics, distribution, courier, transport, and financial services, which are particularly high. Barriers to services that underpin digital networks are also growing. They're up by over 25% in the last decade. And measures affecting cross-border data flows are also on the rise. So what should we be doing in this context? I mean, for starters, the OECD point of view is to encourage governments to find a way of addressing their concerns with the global trading system in a collaborative manner to avoid ratcheting up of retaliatory trade barriers between countries. And maybe the bottom line at this point is that any leverage generated through the current tariff dynamics could and should be channeled towards incentivizing services and digital reforms and contributing to the enabling environment for some of the gains from AI, Nick, that you mentioned. I think it's important for CSI and the services industry to keep making this case. And we hope that some of the new data and evidence that the OECD brings to the table can enable your advocacy in this regard, because the macroeconomic gains, improved supply chain resilience, manufacturing competitive, and economic security that so many countries are aiming for are really driven by services competitiveness. I'll stop there, Nick, and I look forward to hearing what others say. And if there's a further round of questions, I look forward to that. Thank you.
Yeah, super interesting. Thank you, John. And you mentioned logistics. I want to go to Carlos, who obviously logistics firms are often at the forefront of responding to trade policy shifts. And we're at a moment now where we've seen a few shifts over the past several months. I think many of us have been involved with creating databases that assess the current rate of reciprocal tariffs and 232 tariffs and everything else. What has this meant for DHL Express? How do you communicate these kinds of tariff shifts to your business partners, and how do you approach this as a company overall?
Sure, thanks. Well, first, thank you very much for having us today. As you could see, I brought a crowd of supporters there. So, well, when we're speaking about tariff policy, I guess sometimes people could think it's not related to services, but it actually is very relevant, as most of our companies, as it has been mentioned several times already today, we are all connected somehow to the trade in goods, right? And as you pointed out, logistics is really the backbone of cross-border trade. Now, the thing is, well, it's not only the backbone of cross-border trade, but when you make any regulatory change, sometimes it also has, let's say, unintended consequences, to put it some way. Now, these unintended consequences of tariff policy, the thing is that when you start analyzing what's really the impact, it may have significant changes. And in an environment where your customers are relying on your service of speed and to make sure that the goods are delivered properly and timely in this case, into the US market, when you don't know the rules or the processes that you need to follow tomorrow, this becomes a huge challenge, right? So if we put it, let's say in simple terms, let's say that I'm a barber, right? And one day I have to pay a higher price for my inputs. It might be concerning, but I can still work. But if they tell me, if you buy a shampoo from China, you're gonna be able to use just one hand to make a haircut, it starts becoming more challenging, right? And if they tell me the next day, but if you buy, let's say, the cheaper line of that product, you're gonna be able to use only your left hand. And then they tell you if you're using steel scissors, then you can only use 2 fingers, and so on and so forth. Now, if you look at it from the logistics perspective, it's significantly much more complex than that, right? And just for those of you who may not be that familiar with the express model, you basically have 3 buckets. You have a first bucket, which is probably the most famous one, the de minimis, which are shipments up to 800, which are duty-free. And then you have another bucket, which is the so-called informal entry or simplified entry, where you pay the full amount of duties and taxes, but it also allows you to file in a much more efficient manner thousands of shipments in a consolidated manner. And this is up to $2,500. And then you have the formal entry above $2,500, where the process is slower, much more complex, and you even have to provide additional data, even sensitive data like a social security number of your consignees. And then basically to simplify things, what happened with these changes in regulations, which was actually an unprecedented use of these instruments, what happened was that from one day to another, basically all the informal entry disappeared. And then for the de minimis, it disappeared for China. And these are the buckets where you concentrate the highest volume. So from one day to another, you suddenly have thousands of shipments that have to be processed formally in a slower and much more complex process. But you can't just do nothing. You have to engage with authorities, which it's actually what we always do. We always engage with authorities because we see ourselves as a partner to authorities. We want to comply. So we engaged, and that's also the reason why we invest so much in technology, in modernization, in ensuring the highest levels of compliance. So we engage with authorities because we also have to advocate for our customers, right? So thanks to these engagements and thanks to the effort from the team, we were able to get back these informal entry and continue process as we normally do. Because as many of you heard, DHL actually had to temporarily suspend even its services on B2C customers above $800. It was to avoid the risk of having suddenly to collapse your warehouses and making even more significant challenges. So this is to say in the end that I found these gathering very important because it's important to connect with other companies, but it's also important to raise the voices. And this is why CSI is so important, because the changes will continue. It's been said, we're not going back to how it was 10 years ago. That's right. But more changes will come and we have to be ready and we have to work together. Thank you.
Great, thanks so much, Carlos. And turning to Ximena, there's obviously a lot of complexity in how the tariffs are being carried out. But it's also pretty clear that both for President Trump and Ambassador Greer and others, one of the motivating factors for reshaping the trade agenda is to empower American workers and to find new ways to harness the sort of innovative capacity of the American people. Your company, BuildWithin, I'd love to hear a little bit more about what you're doing and whether you see any opportunities in terms of workforce skilling and education relating to the current trade agenda.
Thank you. And thanks for having me. Well, first, I think it's probably the not connected that to tariffs, right, all the time. So we hear a lot about workforce, but not necessarily in this context. And you know, when we started this company, this is my third company. I'm what they call serial tech masochist, and what we created this company because in our prior company we train people on the job. And we had software developers and customer success managers, et cetera, for about a decade that were trained on the job. Then that company got acquired. We started BuildWithin to help other employers and governments to upskill people, train them on the job, and more modernize workforce. So we work with states like the state of Maryland, Washington, D.C., Tennessee, California, et cetera, with the government departments of labor to figure out ways to put unemployed or underemployed people in good jobs, not just jobs that recycle generational poverty, but actually jobs that get out of the life. And at the same time, we work with companies like United Airlines to do software apprenticeships. So what we love, and of course is complex, and I hear all what you say, and there is so much true about all of the challenges, but there is a really good opportunity for what we're seeing right now. That is that the conversation is focused on American workers. So for a long time, education and workforce, they were parallels. They never intersect. So you'll train somebody for 16 years, 18 years, and we call train and pray. You'll train somebody so they'll get a good job. And then 50% of college grads work in something else. And you have 14% of unemployment just a few miles from here. That is at the level of a third world country, with people that sometimes also have college degrees. And you drive to West Virginia and you see what it was and what it is today. And so there is a problem that we have we became very passive about the skills that we provide people to work. In K-12 education, still the same as it was 20 years ago when I was a school principal. It's 15 years ago. It's the same. It's still the same. And it shouldn't be. Kids can learn fast. We wonder why they don't want to go to school. We wonder why they have their phones all the time. And it's because we're outdated. And at the same time, we don't give them experiences to practice on the job. So it's theory for 16 years sometimes. Then you go to work and you're like, well, I kind of don't like this job. I should have done something different. And then you have debt and you have very low skills. The last thing I'll say is that jobs have changed already. They started changing dramatically in the past 10 years. But 2 years ago, just a complete revolution came up. Millions of jobs are disappearing. You go to a grocery store, what's happening with the cashier registers? Where are they? Are we upskilling them so they can maintain those systems, or are we sending them back to American job centers as unemployed and underemployed people? I mean, which one are we doing? And what tariffs has done is force governments to think about what exactly are they producing in the school system? How are these agencies collaborating? What type of training are we investing? And with executive orders, apprenticeships. I mean, that's what Germany does. Switzerland, #1 in the world in innovation. 2/3 of the country in Switzerland go through apprenticeships. And we saw an executive order on apprenticeships here. So that's what I love about, there's always a flip side, and that's the one where I see a lot of opportunity.
Yeah, really, really well said. And I agree with all of that. I think that's really essential to tie together the trade agenda to the education agenda in a bit clearer kind of way, both given disruptions from trade and from artificial intelligence and technology, all the more important to have a coherent system for investing in the future of education there. I wanted to pivot to Caitlin a bit now to talk about one other core aspect of what the trade and tariff agenda has enabled, which is a series of negotiations with countries around the world. And it's given some real prominence to the discussions that the U.S. wants to be able to have with many markets that are looking to enter into deals to address their reciprocal tariffs. For Visa, how do you think electronic payments fit into the overall U.S. trade agenda? What are your core priorities and challenges around the world? And what advice would you give to the room here as they think about how best to think about payments in the context of trade?
Thanks so much, Nick, and congratulations, Christine and the CSI team for bringing us together for another terrific Global Services Summit. I'm really happy to be here representing Visa. Visa has a long heritage in the U.S. We were founded 60 years ago in the Bay Area, and now have employees and offices across the United States, including 2 of our global data centers in Virginia and Colorado. Our business today is super global, where we operate in 200 countries and territories around the world. And a growing share of our revenue comes from outside of the US and, of course, supports our operations here at home. Payments have really become an area of focus for governments all over the world. They're looking at payments with respect to how payments facilitate e-commerce, travel and tourism, economic inclusion, and increasingly government use cases as well. So think about disbursements or revenue collection. And we're, really proud as Visa of our role in helping to facilitate secure payments around the world. And this is really an industry where American companies have been at the cutting edge for decades. And for that reason, we're hopeful that the administration is really thinking about the relevance of US payments in their trade agenda. Correspondingly, we are seeing an uptick in localization policies, laws, different measures that disproportionately affect American payment companies and are designed to give advantage to our domestic competitors. And we are pleased to see the administration, focused on asserting a level playing field, addressing unfair trade practices, including for services. And we're really thinking about the opportunities in 3 buckets. The first relates to enforcement of existing trade deals, particularly the US-China Phase 1 agreement, as well as USMCA. Secondly, some quick wins for services. So a unique opportunity in these 90-day negotiations to show our trading partners that the US cares about services companies. And third, the opportunity for new and higher standard trade initiatives moving forward. And here, see some promise with the UK deal. So maybe I'll focus on enforcement first. And as we heard from earlier speakers, in the day 1 presidential memorandums, the president directed a review or look at compliance with the US-China Phase 1 deal and USMCA. In the US-China deal, China committed to provide market access to 3 American payment companies. This is a decades-long issue that the US has been working on. And today, 5 years later, Visa is the only company still waiting for a license. So we are really hopeful that the administration will prioritize enforcement of this longstanding issue. And it also represents an opportunity for China to demonstrate their real commitment to market opening and set some positive momentum in the relationship. Also on USMCA, we're all familiar with the gold standard of the digital trade provisions. We're very pleased that they apply to financial services. It's also a really high standard when it comes to payments. And we see an opportunity for the administration to enforce some of Mexico's commitments, in particular with respect to the opportunity to process domestic transactions using internationally accepted standards and our US-based infrastructure. So we're hopeful to see that soon. I'm getting the 1-minute sign, so I'll try to wrap up. But just in terms of quick wins, really hope that the administration will be looking at services issues in the 90-day negotiations. We're all familiar with the range of measures that are affecting the industry. One that I would call out is just the increase of regulation of cross-border services, and that we see a real opportunity to sort of stem the threat of those popping up in other markets. So I'd call out Costa Rica as one market where we're seeing that. And then lastly, new trade initiatives. CSI has put out a really terrific paper on the opportunities with US-UK. We very much support those in the payments industry and look forward to working together with the administration on those.
Great, thank you. And I think we're getting called for time, but I just wanted to say thank you to Christy, Casey, Elsa, the whole CSI team for putting this on today. All the US government folks here are here today too. Thank you for your service and for all the work you're doing in a very busy environment to advance US trade interests. So thank you all for being here today.
Thank you.
Thanks so much to Nick and the panelists. I think that was a very useful discussion. And I really liked the way that Caitlin kind of summarized how we're looking going forward in terms of the three buckets, in terms of enforcement and 90-day opportunity and new initiatives. And I think, obviously that's where our work is really focused in CSI in all of those three buckets. So thank you for that.